instead of your properties, or the ones that we were partnered on going through your CPA, showed a $75,000 net loss. So because of that, you educating yourself, networking, etc.
Not how much you make is how much you keep.
Yeah, that's it. What's the most surprising thing about owning that maybe you didn't expect to see, or what are some of the ancillary benefits, or the amount of work, or just, what's different now than before you owned any real estate?
Yeah, that's a great question. One of the things that I really love about multifamily is depreciation, and most specifically cost segregation. It's really, a lot of people say it's what you make, but I truly believe it's what you keep. And so if you're able to have a K1 with a substantial paper loss, you're really able to keep more of that money and reinvest it as well. The next thing is it's amazing to watch as rents continuously grow, how your cash flow grows as well. And then what I love, a lot of these deals now, we've gone and went and refied them. And when you do a refinance, that's tax-free, it's a loan. And so it's just been this snowball that the more you can put in it, the faster that snowball grows. And then the results just grow exponentially.
Gosh, that's great. As far as the tax benefits, so in the IRS code and the tax code, there is something called being a real estate professional. Are you considered a real estate professional, meaning you work 750 hours in the industry actively?
Correct. And that has just such massive benefits, right? Because what that allowed me to do was to take the income from the sales job that I had with Jake and Gino as a 1099 employee, and essentially write off the majority of those taxes.
Yeah, I remember my first year out of my W-2, and I made about probably 40% less. I was in real estate full time. I maybe got up to 60 units that year. Lots of them were in repositions. I had some active income in the real estate, maybe a fee or two here and there. I was making some money from property management. But the thing that was surprising to me at the end of the year, because I went into it, without any mentors, any real coaching. And at the end of the year, my taxes showed my gross income significantly different, but my net income was almost exactly the same. I think I made significantly less on my gross and might have made more on my net. And that, my friend, was one of the biggest light bulb. It was unreal. The year before, I had written, and this was a ton of money, a check for my taxes of like 17 grand, and I was paying in taxes the entire year. However, the following year, I was paying no taxes in because I was on my own. And also I really didn't know, and I needed every dollar then. I was going to figure out how to pay my taxes when the tax man came. And instead, all of the depreciation and write-offs got rid of my tax burden. So it's just such a powerful thing that I don't think is talked about enough.
I love that because the tax code is available for everyone, right? Anybody can do this. A lot of people, when they hear this, they say, oh, you're lucky, or you're taking advantage of the tax code.
Loopholes.
Well, listen, you can do the exact same thing. And in fact, you should. And that's why the education and learning from people that have the results that you're looking to get is so important.
Yeah, what's the there's a quote from Jim Rohn actually talking about how basically you don't want to teach it all yourself. I'm going to murder this quote, but basically just walk in the path of others. They're going to lead you there a lot quicker. And so that's one of the reasons that I was that's actually how I learned about the real estate professional. I remember the first year it didn't work out on my taxes. I actually had to have my taxes redone same year by a CPA. And the reason I found that CPA is I found another real estate investor in town here who was using that CPA, and they said, something's wrong with your taxes. And I looked at it, tens of thousands of dollars, just because I was given that guidance by somebody else who was doing something before I did. So, that's huge, man. And that's awesome that you were able to take advantage of that too.
And that's funny. That's how I actually found it, because you and I had owned some properties that next year, and your accountant was doing the taxes for that partnership, and I had my CPA at the time doing the ones for the properties that I owned myself or in different partnerships, and they were completely different because he didn't know all the additional benefits. He wasn't as aggressive. He was showing that I would gain $1,000 or something, which still was less than I actually made on the property. Instead of your properties, or the ones that we were partnered on going through your CPA, showed a $75,000 net loss. So because of that, you educating yourself, networking, etc.
Not how much you make is how much you keep.
Yeah, that's it.